Okay, continuing with chapter 4, other revenue sources. So the non-profit parking tax. So there's this law in the US, but I'm not sure if we don't have this in the Philippines, so I'm going to skip. Specific exclusions from unrelated business income. So these are the following. Essentially considered as related business income. So dividends, interest, annuities, capital gains, and other investment income. Gains from the sale of property other than inventory, because the church would have to eventually, let's say if they're going to relocate, so they might have to sell the land and the building so that they can have the cash to put up a new one, or maybe they would have to dispose old vehicles, so they have to sell the property. Okay. And then next we have royalties, if they are granted, if they do have what do you call it, intangible properties like copyrights, and then they can receive royalties from that. Rent from real property um, does not apply if the income is debt financed, meaning the property is either used as a collateral, or to be able to acquire the property, the church um, what do you call it, availed of a loan or borrowing. It doesn't have to be uh, the property doesn't have to be a collateral for that particular borrowing, just that the church did borrow money to acquire that property. Okay, but again, if that's not the case, then this would be considered as related business income. Number 5, trade or business in which substantially all of the work is performed by persons who are not compensated for their work, the volunteer exception. Trade or business conducted primarily for the convenience of the church's members, students, officers, or employees. Convenience of members exemption. Example of this is the operating a cafeteria, okay, within the church or within the Bible school. A trade or business that consists of selling merchandise, substantially all of which was received by the church as gifts or contributions, the donated goods exception. Qualified sponsorship activities and the bingo games that meet certain criteria, although we don't have these in the Baptist church. Okay? Bingo is, it's still considered some sort of gambling. We'd rather have raffle wherein to join, you don't need to pay anything. Right? Okay, so for the volunteer exception, essentially if the church is going to run a business-like place, let's say a cafe or a computer shop, okay, or the library, okay, if the people who are managing the place are simply volunteers, they're not being paid money, then might be considered as related business income. Okay, operates a coffee shop in a retail location open to public. Convenience of members exemption. Let's see. Example of this is the cafeteria being open during, let's say, Sundays to cater to the visitors or the members who'd like to stay, okay, for the afternoon service, so they can eat at the cafeteria. And then for the Bible school students who are staying at the dorm, so they can just go and eat at the cafeteria. It's for the convenience of the members. Donated goods exemption. So let's say if they're raising money and doing garage sale or thrift shops, if the items being sold in the thrift shops are donated by the members, so it would meet this one, the donated goods exception. Qualified sponsorship activities. Although again, Baptist churches, normally we don't do this because we don't want to be affiliated to private businesses or other organizations wherein we're not sure of their principles, we're not sure of their values, and we'd rather not be associated with them, which might call into question our own organization's reputation or value, so rather not. Advertising is not permissible recognition. Payments for exclusive provider rights are not qualified. Sponsorship payments. We don't have these. Payments in excess of the value of substantial return benefits. Special note about arrangements that do not meet the criteria. Being the game's exemption, we don't have this. We're going to skip debt financed income. So again, for example, property. The church has a property, but to have that property, they availed of a loan. They borrowed money. That's why it's debt financed, meaning they were able to get the property by borrowing money from a financial institution. Okay, and then they're using the property to, let's say, they're renting it out, and so they're generating a bit of income from that. So if that's the scenario, then what do you call that? Considered as unrelated business activity. Okay. So acquisition indebtedness. Again, if to acquire the property or to improve the property, the church borrowed money. Okay. It doesn't matter if the property is used as a collateral or a different property was used as a collateral for that debt. Collateralization is not relevant, so that's what I mentioned. Special rules for identification and tracing of indebtedness. Essentially, if it's used for it, if a major portion of the borrowing is used to acquire the property, so that's a debt financed property. Special exception for educational institutions. For educational institutions, the clause says if the income is used substantially or exclusively for educational purposes, then they're exempted. Okay. Exception for property used for exempt purposes. I call it. Property used by church exclusively for exempt purposes is not debt financed property, regardless of the existence of acquisition indebtedness. So exclusively for exempt purpose. Okay, so that's an exception as well. Sale of debt financed property is not used for exempt purposes. So if it's not used for the main purpose of the church, then would not be considered as related. Exception for property used in certain activities. So you have to identify whether it's related or unrelated. Neighborhood land rule exemption. Have that. These are a bit more technical, but so we're not going to discuss them in depth. Calculation of debt financed income subject to tax. Okay, tax consequences. Taxation is truly complicated. So for the most part, what do you call it? What churches normally do, or what tax exempt organizations do, is that they try to avoid such transactions that might call into question their tax exemption status. So they try to avoid engaging in activities that would jeopardize the tax exemption status. So best to avoid. Okay. Federal and state filing, calculating and minimizing net unrelated business income. So again, if it's unrelated business income, normally they would be subject to tax, and if they are subjected to tax, it falls on the church to file and pay the corresponding tax, okay, on the unrelated business income. Can a church have too much unrelated business activity? This is US. They have 10 to 15% may come from unrelated business activity, but if it's possible, if everything could be related to their main purpose, then that's better. For educational institution, it's here in the Philippines, 70 is considered substantially all for educational purpose, and then 30 can be, unrelated. I think it's the same for church, or it could be exclusively all for the mission and purpose. Generating income from activities without generating unrelated business income. So this is possible, and this is actually the better situation. Bookstores and gift shops. Essentially, you just engage in activities that are related to the main purpose, main mission of the church. So you have your bookstores and gift shops, volunteer exemption can apply these exceptions, selling substantially related items, selling at offsite locations through catalogs and so on. Parking lots, substantially exempt use exception, neighborhood land rule. What else? Concerts or other special events. We do have musical nights, but yeah, minimal fees. Thrift shops or other sales of donated merchandise. Normally, we do this when we're uh, raising funds for special purposes, like sending uh, aid to calamity. What do you call that? To places that suffered calamities. Okay. Corporate sponsorship events. We try not to script programs. We normally not available. Coffee shops and cafes. So there's exclusions from unrelated business income. Implications for state and local taxes other than income tax. Sale of goods and services normally subjected to VAT, value added tax, which is different from income taxes. So there is that. Okay. So again, considerations before engaging in other activities, which can be sources of other revenue. Have to check the, of course, legal implications, tax implications, and if the church has the capacity, the time, and uh, the resources to conduct that. Okay, so that would be it for chapters 3 and 4, right? I haven't prepared a discussion yet for chapter 5, so might post that on Saturday, maybe, alright? So that will be all for chapters 3 and 4. Thank you.